Have you ever used a product by any company and absolutely loved it, and everyone around you loved it as well? So you got an idea that you should buy the stock of that company. So you go to Grow or Zerodha and you search for that company and you couldn't find it. It's nowhere. Why is that? This is part 2 of our Understanding Stock Market series. If you have not watched part 1, please watch it here. In that part, we extensively talked about what are indices, what is BSE, NSE, Nifty, Sensex, how do you find the top companies in NSE and BSE, and how can you use all of that to build a lot of wealth. So if you have not watched that video, please watch it here. Now let's talk about this video. In this video, we will extensively talk about the difference between a private company and a public company. What is IPO, what is FPO, and should you invest in an IPO, and can you actually make a lot of money using IPO? And in the end, I will tell you my investing style, how I look at all these things and how do I invest in the market. So stay tuned for that and watch the video till the end. Before we start, an extremely important announcement. As I mentioned before in my videos, every week we pick one lucky winner from the comment section and I schedule a one-to-one call with that person where you can ask me as many questions as you want, and you can also get your portfolio reviewed. So if you want that, comment on this video and I might talk to you next. Now let's talk about this video. Let's start with an example. Let's say you want to start your new business of selling ethnic wear online, and just like any business needs funding, this business would also need a lot of money. So to fund this, initially you use your savings account. You have, let's say, 10 lakhs in your account. You use that to fund this business. Let's say 3 months have passed, your business is going pretty well, you're able to sell a lot of ethnic wear online, you're getting a lot of orders, but now at this point you need more people to manage this business, and since you need more people and more inventory, you need more funding, but you don't have any money in your bank account. So generally the option that you have right now is you would reach out to your family or your friends or your relatives for some money so that they can lend you some money that you can repay them back after you have a lot of profits. And let's say you get like 30 lakhs from them, you use that money to get more people in your team, and now you're able to do more orders. At this point, let's say 6 months have passed and now you want to expand even more. Now you want to set up your own shop, let's say in Chandni Chowk in Delhi, because that will boost your business even more. But at this point, you don't have money and your relatives don't even have more money. So the option that you have here is maybe take a bank loan, but that is not a really great option because you would have to pay a lot of interest and your profit would be just eaten up by that interest that you would have to pay. So another option that you have here is, and this is a very important step, at this point you can actually go to angel investor. These are actually sharks. If you have seen Shark Tank, this is exactly what it is. You can reach out to some people who are called angel investors and they would fund your business, which basically means, and this is a very important step, because this time when they give you money, they're not lending you money, they are taking some stake in your business, which basically means, let's say, just like in Shark Tank, as they say, we give you 5% in return of 50 lakhs, right? So you take, let's say, 1 crore or 50 lakhs or whatever from these angel investors to fund your business, and in return you give, let's say, 5 or 10% of your company to them, so they also get profit now from your business. At this point, your shop is working really well in Chandni Chowk, and now 2 years have passed and now you actually want to expand even more. You want to set up new shops in whole of Delhi NCR, and this time you need even more money, and this cannot be funded by angel investors also. So what is the option that you have? This time you can reach out to venture capitalists. These are the organizations that fund startups and they have way more money than angel investors. And again, this point as well, you would give up some shares of your company to these venture capitalists, and in return they will give you some money. For example, you raise 5 crores from them in return of 20% of your equity, and now you have even more money, and this goes on for, let's say, 3-4 years, and now this business is going really well. So you want to expand even more, and this point you want to expand in whole of India. You want to set up, let's say, 50 new shops across India, and this cannot be funded by venture capitalists as well. So at this point, and this marks a really important step, you can actually go public and you can raise money from the public, and this is actually taking a company, like a private company, to a public company, and this is done through an IPO. This is called as initial public offering, which basically means you had a private company, you need more money to fund your business, or could be some other reasons, so you actually sell your stakes to the general public. You make your company public, and this is done through filing an application to SEBI, which is Security and Exchange Board of India. They do all the due diligence, they see your financial statements, their reports and everything, and then eventually, if all of that is approved, your company gets listed on NSE and BSE. Depends. Generally, all good companies get listed on both the exchanges, National Stock Exchange and Bombay Stock Exchange. So if you actually log into Kite, Zerodha right now or Grow, you can see a lot of good companies, NSE, BSE. They are listed on both the exchanges, and this is the process. They go there using an IPO, and this is called a primary market. When it's the first time you're going public through an IPO, so people can bid for your company. They can actually put a bid. They can, and you have to set a price. For example, when you do IPO, you set your price as 150 to 160, and people can place a bid, and you generally will allot this to people who have placed the highest bid, and this is how your company actually becomes public. But let's say you are selling 40% stakes to the general public, and 40% stakes have been sold. Now people subscribe to your IPO, they got this company. After this is brought to the primary market, which is, let's say now it is available in the stock market. If someone else wants to buy it, but he can't buy it right now because someone else got allotted with the IPO, this is the point when this buying and selling happens on the exchange, on NSE and BSE. So someone else can buy from someone if he wants to sell it, and this is how the trading happens on the stock market. When you log in, you see all the stocks fluctuating. This is because these transactions are happening. Someone owns a share who's selling it to someone else, and this just keeps on happening, and then you see a lot of volatility in the stock because of this reason. And this is precisely the way a private company goes public. Now this is a very important step, because you should understand the company goes through all these phases to actually become public. And when you want to buy some shares or some stock, all you see is just a name, and all you want is just a 10% profit on this stock. It is not like that. It's a whole journey that a company goes through. And now from today, if you buy any stock, imagine it like this: that company has gone through all these phases, and if you buy that stock, you are becoming a shareholder. So you are a part of its risks as well as the profits. Think of it as your own business. Understand about that company, only then invest in it. And this is how you'll make the most money in the stock market. And there's one more point I want to add here. For example, this company initially sold 40% of its stake by doing an IPO, and now they want even more money. So they have to again make it public. Let's say 5% more shares to the public. That is called as an FPO, follow-up public offering, which basically means it's already a public company and it wants to sell even more stakes to the public. Then that is done through a FPO, follow-up public offering. I hope this clarifies all your doubts about how a private company goes public. Now this takes us to a very important question, which is, should you actually invest in an IPO, and can you actually become a crorepati by investing in an IPO? See, I see two problems with an IPO. When a company actually gets listed, you have very limited information of the organization. That company sets the price itself. For example, they set a price range of 150 to 200. So that is the option that you have. Plus the company has not gone through this price discovery process, because the company might think we are valued at 150 to 200 rupees, but the public might not accept it. So you have very limited information when you apply for an IPO. And the second problem with an IPO is, even if you believe that's a great company, even then you can't buy much. You can buy only limited stake of that organization when you actually subscribe to an IPO. So even then you can't become a crorepati by subscribing to an IPO. And one very important thing that you might have to notice, and maybe you would have noticed, is when do you see most IPOs in the market? It is when there's a bull run in the market, when there's euphoria in the market, when everybody is literally dying to buy something in the market, when Nifty makes its peaks. Why? Because these people are smart. They know when to launch an IPO. If they launch at that time when the whole world is crazy about the stock market, they want to buy, then they can actually sell it at a really higher price as well. And that is when you'll see the most number of IPOs getting launched, when there is euphoria in the market, when a lot of people wants to invest in the stock market. That is when you'll see most IPOs. And you can consider examples like Zomato, Paytm. Look at, this is your homework. Check out the date when they were listed and check out how the stock market was performing at that time. So why did they launch at that time? And that is a really good homework if you would see. This brings us to the last part of the video, which is my style of investing. I basically never ever invest in an IPO, and the reason behind that is I don't know if that price is correct or not. The listing price of the IPO is correct or not, because that stock has not gone through the price discovery, because that organization might think the price of 150 is correct, but when it is actually listed on the exchange, when people actually trade, then you would get to know if that price is correct or not, because people might completely reject that price that the company is quoting, and the stock could just fall a lot. And then within a few months, you would get to know what is the right price for that stock. And if then I believe in that company, I would put money in bulk. I don't buy of 10,000, 20,000. I put a lot of money if I actually trust that organization. And that is the other point as well. Because of that reason, I don't invest in an IPO, because I can't buy much. I am not the kind of investor who would just put 20,000 or 40,000 in a stock, because as I mentioned in my previous short, which is, if I invest 20, 30,000 in any stock, and even if I get 100% return, how much money have I made? Just 20, 30,000. So that is the whole point. I don't want to put small amount of money and get, like 100% profit. I would rather put a lot of money and get just like 20% of them. And I would recommend you the same thing. If you believe in any company, put a lot of money. If you don't believe in any company, don't put any money, because if you put 5,000 in any risky stock, even if you gain 100%, you won't make much money. So with this, we'll close this video. If you liked the video, if you think the video was informative, please consider subscribing, and please also share the video if you think it would add value to a lot of other people as well. And as I mentioned before in the starting of my video, that I don't post videos randomly. If this is the first video you're watching, please go back to the channel, check the Investing 101 playlist, and watch the video in series. That will give you the maximum value. Thank you so much. Until then, keep investing in your dreams.